What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about SoFi Technologies, and SoFi Technologies is a stock that I do personally own, so keep that in mind throughout this video. But it is a stock that, in my opinion, is at a very interesting valuation, and we have seen it go through a ringer here today as SVB, Silicon Valley Bank, has announced that it is basically on the verge of collapsing, and this is affecting the banking sector across the board, whether it is SoFi or even Bank of America, JP Morgan. A lot of those banks over the last week have been down in a very massive way as this news has kind of came out and unfolded over the last few days. So what we're going to go over in this video is we're going to take a look at that, and then we're going to take a look at what is going on inside the company, because we have some very interesting moves being made by the CEO, Anthony Noto. So we're going to look at those, and then we're going to look at what risks come along with SoFi, because their risk right now is not really involved with SVB. They have different risks that are on the table that we do need to acknowledge. And then finally, we will end off this video by taking a look at their financials and where they could be over the next year. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And with the news that's come out about SVB, we can see that SoFi has been affected in a major way. So the stock is down over 8% in a single trading day. Over the last 5 days, we can see that the stock is down an incredible 17.58%. Over the last month, around the same. Over the last 6 months, down around 13%. And then over the last year, we can see that the stock is down almost 35%. What's very interesting, and what we'll take a look at later, is there is some interesting buys that were going on in this time period. So that is something that's important to keep in mind. These lows of around $4.30 to $4.50, that's kind of a very interesting target zone. But right now we're still about $1 off of those lows. And just to show that this is not just a SoFi problem, we are seeing this across the banking sector. So in blue, we have SoFi, in red, we have Bank of America, and then in green, we have JP Morgan Chase. So JP Morgan Chase is only down 5.2% over the last month, but Bank of America is down an incredible 14.9%. And then again, SoFi is down somewhere around 18%. And a lot of this downward move is only unfolding over the last week or so. And all of these downward moves are coming on the back of news that Silicon Valley Bank is set to collapse. And I'm not going to go over all the details in this video. You can watch a 10 or 15 minute long video. They're all over YouTube right now of why Silicon Valley Bank is collapsing. But basically my understanding of it is they had a lot of deposits coming in over the last couple of years. What they had to do with them is they had to put them into long-term treasury bonds at very low yields. Now that the yields have gone up, bonds are inversely related, the average price of them. So as the yield goes up, you'll basically see the price of the bond actually go down. So what that means is they have unrealized losses on their balance sheet. And really that just puts them in a tough spot, because if people come and ask for money out of the bank, then they have to sell off some of those assets to be able to provide that liquidity to those people. So right now what's going on is a lot of people are rushing to the bank, hearing the news that it could collapse, and basically saying, hey, we want our money out. So that is basically just making the problem worse and worse over time. And people are worried that that is going to affect other banks like JP Morgan Chase, Bank of America, and potentially even SoFi. One person who is not worried is Anthony Noto, who's the SoFi Technologies CEO. He makes an opportunistic $1 million stock purchase as SVB crisis fuels sell-off. SoFi also disclosed on Friday that it does not hold any assets of Silicon Valley Bank. On Friday, Chief Executive Officer of SoFi Technologies, Anthony Noto, bought around $995,000 worth of shares of SoFi Technologies. This is a purchase of around 180,000 shares in a range of $5.49 to $5.56, with an average cost of around $5.52 per share. With Anthony Noto buying more shares, we think he's trying to signal to investors that the contagion impacting names like SoFi Technologies is creating a good buying opportunity. So basically, when CEOs are buying shares of a company, it often means one thing. It means that they believe the stock is undervalued. When they sell, it is not the complete reverse. A lot of CEOs are getting compensated in ways where it involves stock compensation, and they may need the money either for taxes, for a new home, for whatever purchases they have going on. So they could sell out for a number of reasons. It's not always that the company is in a bad situation, but right now what we are seeing is Anthony Noto is buying in, and that really only indicates one thing, that he personally believes that the stock is undervalued. And this isn't the first time we've seen Anthony Noto actually purchase shares of SoFi. So back in December, he actually scooped up around $7.4 million worth of shares at a price below $4.60. So we mentioned there when we were looking at the chart, that kind of price range of around $4.20 all the way up to $4.50. That seems to be where Anthony Noto really starts loading the boat. So he goes very aggressive when the stock is trading that low. So he believes it's really at a very deep discount when it gets down to around that $4.50 mark. But right now, obviously, he loaded up a little bit more. So he still believes the stock is undervalued, but not as undervalued undervalued as, if it were to drop back down to that $4.50 range. As I mentioned in the intro, SoFi does have its own issues. They are not the same as what's going on with SVB. SVB has a lot of people coming to it and basically asking for their money out, and that is never a good situation when it comes to banks. But what SoFi has a problem with is the student loan forgiveness issue that's going on right now. So they really aren't going to be affected by the forgiveness as much because a lot of that is related to government loans. So they really won't have a huge effect. But the big thing is they want to get these loans restarted as soon as possible. What we've seen over the last couple of years, ever since the pandemic, all of these loans have been frozen. And that is a large source of revenue that SoFi was very focused on pre-pandemic. And now what we are seeing is that they want that money back coming into the company. That is going to be a huge vector for them to get back to profitability because these have been frozen over the last couple of years and really put them in a tough spot when it comes to, getting repayment on all of these loans. They're just sitting there on their balance sheet wondering, when they're going to start getting this revenue back in. So that is a risk with the company, is what's going to happen with all of this student loan forgiveness. Is the Biden administration going to try and target some of these more private loans and try and forgive portions of them? What's going to kind of go on with that whole situation? At the end of the day, what's most important are the metrics behind the company. So what's been very interesting with SoFi is they announced their last earnings call that they were really going to push to achieve profitability over the next kind of 12 to 24 months. And that's what analysts are kind of looking at. They do have a tough year for 2023. And I think if they get their student loans restarted and really start getting payments on that, I think these estimates could be low. I think a lot of, analysts are looking at the company and saying these repayments are going to stay in limbo until this whole lawsuit situation going on with student loan forgiveness is really figured out. So a lot of analysts are still expecting losses in 2023. We can see here the average estimate is around a loss of 20 cents. And then for next year, they're actually expecting it to, basically break even is the average estimate. We have a low estimate of minus 11 cents and then a high estimate of 24 cents. Again, I think a lot of this is not really baking in the potential of a early restart of a lot of these student loans. So I think that would be huge. The other thing to keep in mind is they have incredible growth. So we see basically 25 to 30% revenue growth or sales growth over the last, couple of quarters. And then we can also see that, projected going forward, they're projecting around 28% growth in 2023 and then 26% growth in 2024. And one thing that SoFi has done continually over the last few quarters has been a surprise on EPS. So here we have a 7% surprise, 8% surprise, 10% surprise, and then a 44% surprise. One thing to keep in mind is when these numbers are very small, you see small deviations where it's only, 4 cents here, but that's a 44% surprise. So that is one thing to keep in mind. But what this could mean going forward for SoFi is if they continue to surprise and beat analyst expectations, we could potentially actually see profitability much sooner than analysts are expecting. So with all of that said, I do like SoFi Technologies. I like the company for the long term. I think that they could achieve profitability over the next, 12 months, but I think it's a lot more realistic that they'll probably get there in the next 24 months. So I personally am not buying more of the stock, even though it's dropped so low. I've built out a very solid position and I'm kind of happy with where my cost basis is. I'm still in the red. I'm not positive on the stock. I would love to have, been adding when it was at $4.50, but I wasn't. I added, a few shares and lowered my cost basis a little bit, but I still, just feel comfortable with where my position is built out at right now. So overall, again, that is just my opinion. Make sure you are doing your own research. One stock that I do find very interesting, and let me know in the comment section if you want me to make a video on it, is actually Bank of America, because Bank of America, in my opinion, is a lot lower risk and they have fallen 15% over the last month. So let me know if you want to hear a video about my thoughts on Bank of America. Let me know down in the comment section, but I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.